תושבי הצפון היקרים, אני גאה בכם.
I want to tell you, there is no ceasefire in Lebanon. We continue to strike Hezbollah with force, and we will not stop until we restore your security. Our great achievements both in Iran and against the axis of evil have brought a historic change in Israel's status in the region.
The Israeli Prime Minister promising to keep fighting Iran-backed Hezbollah in Lebanon, even after agreeing to talks with the government in Beirut. It is a key risk to the fragile ceasefire deal between the U.S. and Iran. Live from Hong Kong, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Oil paring gains with investors positioning ahead of those U.S.-Iran talks scheduled for Pakistan this weekend. President Trump expressing optimism but also threatening Tehran again for charging shipping fees in the Strait of Hormuz. We'll talk market strategy with GQG Partners Brian Kersmanc, who says the long-term impact of the oil shock is yet to be properly priced. And with Pakistan being hailed for its part in the peace process, India is watching warily from the sidelines and trying to downplay its rival's role. We'll assess the regional political plays with the Asia-Pacific Foundation's Michael Kugelman. It's been a little over 2 days since the world stepped back from the brink of a devastating escalation in the Iran war. Now the stage is set for high-stakes peace talks in Islamabad as U.S. and Iranian officials prepare to negotiate the terms of a fragile ceasefire. President Trump says he's very optimistic about a deal despite confusion about what that agreement actually covers. Ahead of the talks, Trump's also warning Tehran against charging tolls on vessels moving through the Strait of Hormuz, signaling that the U.S. opposes a key condition on Iran's agenda. For more, let's bring in Bloomberg Politics editor Laura Davison. And Laura, if I'm not wrong, it was Trump who said that he didn't mind charging tolls as well. He called it a good agreement.
Yes, he suggested just a couple days ago that he wanted to make a lot of money in the region. So we've heard a bunch of different ideas from the president, really just over the past 5 or 6 days, that one, the U.S. would be charging tolls. The winner gets the spoils, he said. Then he pivoted to that the U.S. and Iran could split the proceeds and jointly control the strait. And now he's saying that, sort of threatening Iran, saying you better not be charging these tolls. So like we've had for the past 5 weeks or so, Trump is continuing to kind of give out mixed messages, conflicting messages, and it's really not clear exactly what he's looking for. He's sort of throwing ideas out there and seeing what the reaction is.
And of course, all eyes on that meeting over the weekend in Islamabad. Vance leading the pack. I'm just wondering whether he is the right person to be doing the deal.
We'll find out. I mean, this is really the first time he'll be tested in a high-pressure situation like this. He's gone into other, big foreign policy events. Think Munich, the Munich Security Conference last year, where he ruffled a lot of feathers. Vance is someone who is very online. He speaks very off the cuff. He speaks in a way that may not translate one-to-one in sort of these more diplomatic circles. He's already, made a couple missteps. He suggested that one of the Iranian officials doesn't speak English that well. So we'll see if he's able to, sort of meet the moment and come in and sort of not, unnecessarily get these talks off track because of a stray comment here or there.
Are we even clear who will be at the table and what's really on the agenda? We know that the proposals from both sides aren't likely to meet in the middle.
Yeah, so from the U.S. side, it'll be Vance along with Steve Witkoff and Jared Kushner, as well as kind of an array of Iranian officials who are also scheduled to be there, and sort of Pakistan acting as the mediator. But what the agenda looks like is very unclear. A week or 3 days ago, really, when the ceasefire was announced, the expectation with this would be a very forward-looking talk of, what does peace look like after these 14 days? Are we able to hammer out some sort of longer agreement? But now it looks like we need to talk about the deal that they said that they reached 3 days ago. What does opening the Strait of Hormuz actually look like? Who is in and who is out of the ceasefire? We've heard, Netanyahu say Lebanon is not covered by this agreement. Iran says it is. And Trump has sort of staked out this middle ground, saying that Netanyahu's agreed to, kind of cool it when it comes to Lebanon, but has not, specifically, agreed to a broader deal there.
There are now some suggestions that perhaps Israel wasn't in agreement to the ceasefire.
This is certainly, they came out with a statement shortly thereafter saying that they, wanted to see success here. But in their actions in the past, 36 hours, it's been clear that they haven't, necessarily weren't for this. This has really boxed Netanyahu in. He had a huge win when the U.S. agreed to go into Iran with them. But now that the U.S. wants to pull out, it's clear that Netanyahu is not quite comfortable with that. And this puts him in a very delicate position politically at home as well as militarily.
The confusion continues. Laura, politics editor Laura Davison there. Thank you so much for that. Now, as the world awaits the outcome of this weekend's talks, the war's drag on global growth is becoming clearer. Bloomberg Economics' latest tracker points to a sharp slowdown for March. Avril Hong joins us with more. And Avril, what's been the economic impact so far? And to what extent can markets really look past this?
Yeah, Has, our colleagues at Bloomberg Economics have tried to answer some of those questions. They put this high-frequency data and through, business surveys, for example, into machine learning algos, and what it's pointing to, it doesn't look great. The tracker shows an abrupt shift potentially for the month of March, and this is following on from the momentum that's already built up over the early parts of this year. So that slowing could be quite pronounced. Now flip the board, because they also have these range of scenarios. So in the best case, in which the ceasefire holds, oil goes to maybe pre-war levels around 65 a barrel, then we could see growth at about 3+%, 3.1. But worst case, if we see an escalation and oil pops to say 170, then they see growth for the year, global growth at around 2.2%. And to show you the range from best to worst case, the GDP gap is about $1 trillion. So worth keeping that in mind. Now flip the board again as to how far markets can look past all this. I think they seem pretty determined to, based on what you're seeing on the screen today. It's a lot of green, and the idea that if we get an increase in shipping through the strait, that could help to ease these inflation worries even further, and to allow the price action to be primarily determined by AI optimism and earnings even. But it's worth noting, and this is something that our colleagues have actually cautioned about, the price action not to read too much into it as well. Not just for U.S. stocks, but in Asia as well. You are coming into this week following on from 5 weeks of losses. We are headed for its first weekly gain on the region's benchmark since February. So worth keeping in mind the positioning as well, as always. Has?
Avril Hong, thank you. Well, our next guest believes markets have been anything but priced to perfection even before the Iran war began. Brian Kersmanc is portfolio manager at GQG Partners, which manages over $150 billion in assets. Brian, always good to have you with us. It does seem that the market is reading this ceasefire wrongly. It is not de-escalation.
Yeah, I think the market has been a little bit complacent here. When you look at sort of the reaction to the ceasefire, yes, the temperatures have cooled down a little bit. But I think the bigger implication is, how do you think about energy prices, and how do you think about the flow of energy from here on out? Because realistically, even if you started today and you started, everything sort of magically restarted, you magically started seeing the flow of energy coming back through. It's a couple of months to work your way through just the logistics of getting all those freighters back through. I mean, you're still digesting a month ago the last freighters that would have left, the Strait of Hormuz that would have been arriving in Europe into Asia and things along those lines. We're not even actually seeing the physical disruption from that yet. And then on top of that, you've had destruction and impairment of some of these assets within the Middle East as well. So you have Qatar, was hit, and that major natural gas facility. That could be up to a 5-year process to get that up and running back to full capacity. You talk about Iraq, because they haven't been able to get a lot of their energy out. That's 4 million barrels a day. They've shut in about 70% of their production. And then even after the ceasefire was announced, you had drone strikes that hit the East-West pipeline from Saudi Arabia, which is the main point that they were using to sort of get oil out, even after the strait was hit. That pumping facility was slowed down. And then Fujairah as well in the UAE, that facility was hit as well. So I think the market is taking this a little bit too lightly. I think in the grand scheme, you had $60 oil before we went into this crisis. That was pricing in a surplus of energy supply. What we can see now is that that surplus is gone. So at the very least, you're looking at a balanced market, probably closer to 80. And then each day that this ticks on, you're looking at energy prices going higher from here.
It's not just mispricing in terms of the energy market, it's also elsewhere. If you take a look at the stock market right now, where are you seeing the biggest mispricings?
Yeah, so there's a couple of different places. Obviously, within energy, some of the stocks have been trading off a little bit recently on some of this hope that there's an off ramp here. We think a lot of the cyclical companies, even before you came into this Iran conflict, were priced to perfection. People were assuming there was going to be some sort of economic reacceleration because of deregulation and things along those lines. And you had companies like Caterpillar, John Deere at 30 times earnings. You had GE at 45 times earnings. You had like a Goldman Sachs from a banking perspective at 2.6 times book value. A lot of the European banks were trading at 1.5 to 2 times book. You were priced to perfection. You were assuming that the best case scenario was going to come through. And that may have been true before a lot of this happened, but the market wasn't ready for anything less than perfect. And that was the argument that we were making internally at GQG, was not necessarily that we were expecting an armed conflict to flare up within the Middle East, was that the market was just not pricing anything less than spectacular. And I think we're still trying to work our way through that now. And the market's kind of trying to play this V-shape, Liberation Day rebound. And I think the physical implications are just a little bit more difficult to deal with than what the market is giving it credit for.
What's also been interesting is earnings. We've seen very little earnings revisions to the negative. I'm just wondering whether we're in for a huge surprise when it comes to those revisions later on.
Well, energy is one of the biggest, fiscal inputs, from a stimulus perspective. If you have cheap energy, which we have had for a number of years now, but it's also going to be a fairly large fiscal drag on the other side. You think about even by other products that are coming out of the Middle East. Think about helium. Helium is a major production component that goes into semiconductors. And we're not seeing a whole lot of helium coming out through the Strait of Hormuz because that was a byproduct of what was being produced in Qatar. You think about energy inputs in some of these other countries as well. Natural gas is a very needed commodity for production within a lot of parts of Asia. You think of like Singapore, for example, 95% of Singapore's power production comes from natural gas, and they don't have a whole lot of storage. Korea is somewhere in the neighborhood of, a quarter of their energy production comes from there. Countries like Thailand are like 40 to 50%, Hong Kong as well. So these are material things that you have to deal with. And if you're not getting this energy flow and it's going to be materially impaired, that's going to raise the costs for everything. And you're going to start seeing some slowdowns happening on the back end. So I think this is something that the markets are going to have to continue to contend with and eventually have to price in, and earnings will have to come down.
Right. So, Brian, how do you position? How do you position to capitalize on the opportunities when they come?
So there's a couple of different things that you can think about. Number one, what we thought was interesting, even sort of observationally last year coming into this year, is boring was on a discount. And so things that were perceived as a little bit slower growing, a little bit sleepier, more boring, things like utilities, things like staples, things like, large pharma companies, if you think about the European context, or utilities, power utilities, developed, regulated utilities, tend to grow a little bit slower, but you're still getting, call it 6 to 8% EPS growth, in some cases a little bit even faster than that. Getting a couple hundred basis points of dividend yields, you're not paying an egregious multiple. Those things now become more in focus because they should hold up substantially better during these types of environments. I think energy is another one. People are very quick to sort of call like, okay, well, energy had a little bit of a movement on a year-to-date basis, so therefore we want to sell into any sort of strength. Again, as I mentioned before, the situation that we see in the Strait of Hormuz, you've taken out that surplus. So now your baseline of where the bottom of that energy pricing is going to come through, even if this thing ends tomorrow, is probably closer to $80 a barrel. And if ExxonMobil can make, on an average energy price through 2030, the end of the decade, if they can make double-digit EPS on an average energy price of $60 a barrel, what can they do when energy is sitting closer to 80, let alone at 95 or 100 where we're sitting right now? So I think those are some areas that become extremely interesting, especially at these level of free cash flow yields and the dividends that you're getting off of these businesses coming through. They might be the only areas that actually work well if you get into a true energy shock type of scenario.
So, Brian, when all these risks are being priced in properly, what kind of correction might we see, for example, in the S&P?
Yeah, so the S&P is still baking in. Actually, some folks have even increased some of their estimates from an S&P 500 standpoint. I think you can see some fairly material downside, from an S&P estimate standpoint. And although multiples have come in a little bit, largely driven by some of that tech rotation that you saw to some of those quote unquote halo assets, those hard asset, low obsolescence risk is kind of a phrase that folks have coined. I think that you still see some downside pressure from an earnings perspective. The additional thing that I think people maybe aren't necessarily connecting the dots on is if you think about where does a lot of the funding from the technology side actually come from? So if you're concerned about an AI bubble at all, where does a lot of that funding come from? A lot of it is Middle Eastern investors. And if you've seen that has tightened up and those investors haven't necessarily, opened up to, putting more money into private equity, private capital, or investing in data centers or investing in AI, and that's where a lot of those deep-pocketed sort of flows were going to, that could create a problem even on the U.S. technology side of things. And what's interesting there is we've already heard and seen some cases where folks have enacted force majeure, and they've actually pulled their investment funds back, in these types of scenarios. So could we actually see a slowdown in that capital cycle accelerate what might be the bubble burst on the AI side of things? We haven't even mentioned the fact that if energy is actually driving interest rates and inflation higher, that is the very first thing that kills an economic cycle or a tech cycle as well, when you already have some questions about how much AI CapEx spending is actually going to yield from a return standpoint. So again, those are some of the things that we're concerned about. And I think the market has just been extremely complacent about pricing some of these risks in.
So you're essentially saying that this Iran war could lead to the AI bubble bursting. But how might that play out? I mean, some companies are less exposed to that than others. Would it be, the big players versus the smaller ones like the ones we're seeing in Asia?
So a couple of things we've already heard is some of the smaller semiconductor manufacturers have, seen some delays or been communicated some delays. So you're shifting around some supply there. But also if you're getting a delay in sort of when that CapEx is actually being distributed against, from a CapEx perspective, from a hyperscaler perspective, does that slow down when that comes through? Again, that higher cost of capital, you have to start assessing, okay, well, if I have a higher borrowing cost and a lot of these hyperscalers are pushing more into using debt financing to fund a lot of their CapEx demands going forward, that makes it even more untenable for them to go down that process. Do investors start penalizing them? And then on the other side of things, if you look at some of these other areas that have been a little bit, I guess, beaten up and a little bit overlooked, like regulated utilities, like these consumer staples names, they may end up being a lot less bad than sort of the slowdown that you may get in a CapEx cycle from an AI perspective. Let's not forget that we really haven't even monetized AI in a really big way yet. You're only talking about 10, 20, $30 billion of revenue against $1 trillion almost in spending on CapEx that's been sort of promised here or even sunk into the ground.
Do you agree, Brian, that the likes of Microsoft, Alphabet, Amazon are more exposed when it comes to, the shifting financial landscape versus the likes of your OpenAI, Anthropic?
So I would argue that there is exposure on both sides, because if you think about some of those frontier model companies like the Anthropics, the OpenAIs, a lot, again, those funding rounds that they're getting from, they're going to Middle Eastern sovereigns and things like that to source some of that cash flow. And there's a lot of CapEx intensity there. But even if you mention, an Alphabet or like a Meta, what are the basis of their revenues? It's actually advertising. And people forget that advertising is actually a very cyclical business. So if you're going into maybe a little bit of a downturn or a slowdown, one of the areas that companies, consumer products companies, things like that, will cut down in terms of their budget is going to be on the advertising side of things. So we actually, and you saw a little bit of this towards the end of 2021, now that these advertising business models have matured, you saw a little bit of a slowdown in advertising actually having a pretty material impact on their earnings. And again, this is against a situation where they're already spending well beyond their free cash flow. The free cash flow is essentially gone, and they're raising debt on the other side of this. So I think this could have a material impact to the downside.
So might we see cracks in the financial system on the back of that? given the fact that we're seeing this massive capex and the market's been absorbing all this money?
So from a financial system standpoint, again, we were a little bit more nervous just on the fact that people had priced in an optimal scenario. As I mentioned earlier, like a Goldman Sachs was sitting there at 2.5 times book value, sort of structural highs. You have to think if some of these things, these capital cycles start to slow down, M&A activity has to slow down, investment banking activity maybe starts to slow down a little bit, maybe the IPO process starts to slow down. It does. I'm not saying that this necessarily has to happen now, but this feels very late in the cycle. And then you have sort of this shock that is sitting on the other side of things that potentially slows things down a little bit further. Again, our argument isn't necessarily that we think all of this necessarily happens tomorrow. Our argument is that the market is already priced in that we move on beyond this, and you're not getting paid for that. You're not getting paid for that. So what you are getting potentially paid for is anything less than that optimal scenario. The market's not ready for that. And we like our positioning in that type of a scenario.
We've been talking about exposure to the Iran war in one country, one market. Hugely exposed is, in fact, India, but you're still bullish. Why is that?
So what's interesting about India, I mentioned, some of the power exposures and sort of the energy exposures of some of the other countries where they're getting their natural gas from and how much of that is used. What is super interesting about India is a couple of things. Number one, their power production, 70% of their utility power production, their electricity generation, it actually comes from coal. And India has a lot of coal. And they have the ability to continue to sort of process and get more of that. So from an actual utility and electricity generation standpoint, if 70%, almost 3/4 of that power production is coming from coal, it's not as big of a deal for them to sort of absorb that. A lot of the rest of it, by the way, comes from green energy, things like wind power and solar. So very minimal. You're talking like 3-ish% comes from actual natural gas. Now, they are a net importer of energy, so they do take in crude oil, and they do use that for petrol and diesel and things along those lines, and that will be a bit of a drag for them. The one thing I would say about that, though, is India has some of the most complex and advanced refineries in the entire world, and they're able to take crude flow from a variety of different sources. That's not true of everywhere in terms of the refining capacity, in terms of the mismatch that is out in some of other locations. But India could take Russian crude, which has now been freed up. At least the stuff on the water has been freed up from sanctions. Some of the Iranian stuff that has been freed up. Venezuelan heavy sour crude has been freed up. So you're seeing that India has options in terms of these other things. And then the names that we own are much more on the infrastructure and utility side of things, which are the types of names that you would rather own during some of these periods of volatility anyway.
Quite a contrarian view on India, Brian Kersmanc, portfolio manager at GQG Partners. Thank you so much for your time today. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside, and traders are, of course, keeping an eye on that fragile ceasefire. Also an eye on the U.S.-Iran talks in Islamabad this weekend for clues on the market's next move. Asia, as you can see on your screen, modestly higher. Investors remain cautious. It is set for its first weekly gain since February. Tech shares are higher. They're less exposed to the Iran war, some say. Of course, we're keeping an eye on oil, Brent. Up by about 1%, trading about $97 a barrel. Keep it here with us. This is Bloomberg.
It's almost like it's designed to fail, right? There's no way the president's going to agree to those 10 terms, and there's no way Iran is going to agree to our 15 points. We can go back to the Strait of Hormuz before Operation Epic Fury, or it will require U.S. military intervention to open the straits if the regime goes back on this ceasefire.
For Iran, of course, which is functionally still in control of the Strait of Hormuz, I mean, they get to enter this negotiation with a very, very important trump card, excuse the pun, in their hands.
Some of our guests this week on the prospects for cementing a ceasefire deal between the U.S. and Iran. An agreement between the U.S. and Iran remains on shaky ground ahead of peace talks in Islamabad this weekend. For more on what to expect from the talks, Bloomberg's Pakistan bureau chief Fassi joins us live now from Islamabad. Fassi, first off, it is a big moment for Pakistan. What kind of preparations on the ground that's happening as we speak right now?
Yes, Haslinda, it is a big moment for Pakistan, and the ground that in Islamabad they have created something like a bubble. There is actually a holiday that's been announced for today so that there is not a lot of movement. Security-wise, they want it to be airtight, and they have cordoned off the area where the talks will be held. So no one can go in and out without any security passes or any passes, or for that matter. People have been advised to stay at home. Senators have been told to go back to their hometowns and not stick in the city if not needed. It's a big moment. All preparations are being done, and we are expecting talks to happen tomorrow.
It is still unclear what's on the agenda. Do we know anything?
Obviously, there are different talking points from both sides, but, some key issues that we understand Pakistani officials tell us is, the Hormuz passageway is going to be one, dilution of uranium enrichment is going to be another, and lifting of sanctions by Iran is going to be a third. I think those are going to be some of the key talking points that have not been agreed on so far.
How does Pakistan view its diplomatic influence? There are suggestions out there that Pakistan is basically the mouthpiece of the U.S.
Well, that is not the case, because if you look at reports that are coming out as well, Pakistan has actually told the U.S. as well that at some point that you need to stop the attacks happening in the Middle East or on Iran as well. So it's not like, Pakistan is just a mouthpiece. I think it's played a bigger role than that. It has spoken to both sides. It's tried to, bridge the trust gap that is there between the two sides. And it has been able to get an ear of both sides as well, right? And it's been a neutral country for now. It has not taken sides, and that's why it's been able to play this mediator role. And that is the reason why Islamabad has been picked for these talks.
Fassi, thank you so much for that. Fassi Mangi, Bloomberg's Pakistan bureau chief. Now, Pakistan's newfound role as a Middle East peacemaker is seen as a setback to India's strategy to marginalize its rival. For more on this, let's bring in Bloomberg's Menaka Doshi in Mumbai. Menaka, how's this being viewed in India?
Well, has any efforts at peace and a resumption of energy trade and other supply lines through the Middle East region obviously comes as good news, not just to India's economy, but so many other countries' economies that have been held hostage in the last month because of this war. Now, that's the first order effect, and I'm sure the Indian government appreciates that. I think the question you're asking is about the second and third order effects in terms of the impact both on what this means for how Pakistan is viewed across the world and what this means for India and its relationship with the U.S. Now, obviously, if Pakistan has any element of success, in brokering peace in this situation, it burnishes Pakistan's reputation and in many ways weakens India's case, against its neighbor for allegedly sponsoring terrorism and other hostile issues that have persisted for decades now. The second bit is that Pakistan has always had the ear of the U.S. But if it succeeds in this effort, does it have more sway then with U.S. President Trump, especially Pakistan's Army Chief Munir? And what does that mean for how the U.S. views India? Remember, we still have a trade agreement that's pending fire.
Menaka, please do stick around. Let's get more from our next guest, who is a widely recognized expert on South Asian geopolitics. Let's bring in Michael Kugelman, non-resident senior fellow at the Asia Pacific Foundation. Michael, good to have you with us. When you take a look at what's happening right now, has Pakistan, in fact, outplayed India?
Well, I mean, it certainly seems that way, right? In the sense that Pakistan is being lauded across the world for having contributed to bringing about this critical truce, whereas India has been fairly quiet, has not really been active at all in these peace facilitation efforts. But I think that we need to look at this with a bit more nuance in the sense that India never really had an interest in trying to be a mediator. So it's not like Pakistan pushed India away from an opportunity to do something big. I would argue that India, unlike Pakistan, does not really have good relations at the moment with the key belligerents. India's relationship with the U.S. has been shaky over the last year, and its relations with Iran, quite frankly, could be better. Not to mention, India's diplomatic approach is much more cautious than Pakistan's in the sense that it would not want to proactively position itself as a mediator unless it's actually formally asked by the warring parties. And clearly, India was not asked to play a mediator role, and it was quite all right with that. And the final thing I'll say here is that it's very clear that if Pakistan is successful in getting some type of broader peace, if peace returns to the Middle East, that's obviously a really good thing for India. In part, for one reason, is that India is deeply embedded in the new and emerging geoeconomic architecture of the Middle East. It's involved in the IMEC corridor. It's involved in the I2U2 quad. So India could really benefit in a big way from any effort on the part of Pakistan and other facilitators to produce a wider peace in the Middle East.
The thing is, India has been wanting to be the leader of the global South. Given its position in this Iran war, can it be? I mean, can it be both to the world?
I think this is a bit of an uncomfortable truth for India. I mean, you're right. India has actually been competing with China for the mantle of advocate of the global South. But India has a very rapidly growing relationship with Israel. And of course, Prime Minister Modi was in Israel meeting with Prime Minister Netanyahu just before the war started. So, I mean, for one thing, Iran would likely not see India as a neutral interlocutor at this point. But I would argue that if you look across the global South, there's pretty strong sentiment against the war, against what Israel has been doing in Iran, and also against what Israel has been doing in Gaza. So I think that's a bit of a challenge for India as it looks to try to maintain that status of serving as an advocate for the global South. It's going to pose a challenge for sure.
It's not just the global South, though, Michael. I mean, we had India signing a letter of intent with the Emirates, wanting to be a critical defense partner. So where is India when there's trouble in the region?
I mean, India has not been completely silent. I mean, it has quietly been engaging with its many partners in the region. And, there's been a lot of commentary about how Pakistan is well positioned to play a facilitation role because it has close ties with all the key players, including the GCC states. I'd argue that India has even closer ties with the GCC states than Pakistan does these days in certain contexts, particularly with the UAE. As you mentioned, India also has very close ties with a number of countries in the Middle East, including those that have formal relations with Israel, such as Egypt. So, I think even if India has not been, active, it hasn't been in the news, it hasn't been serving in this facilitation role, it is still a key player in the Middle East, and that'll continue to be the case no matter what Pakistan or other countries do with facilitation. And in particular, if we do get peace in the Middle East, and certainly that's a big if at this point, India would continue to be a very active, critical player because it is an influential actor in the Middle East. Not to mention, I'd argue that for India, the Middle East is probably one of the most important regions for its interest, in the sense that some of its closest partners are there. It's got critical energy and economic equities there. There's several million Indian expatriates that are based in the Middle East, particularly in the Arab Gulf states. So India will still continue to be a player and a presence, but absolutely, in the context of the India-Pakistan rivalry, India comes out looking not too good relative to what Pakistan is up to these days.
I'd like to probe that a little bit more, Michael. I was reading an interview that Bloomberg's Mishal Hussain did with Maliha Lodi, the former Pakistani ambassador to the U.S. And she interestingly said that this course of events over the last few days has helped Pakistan establish itself as a middle power, which has the capacity to influence, if not shape, international politics. If this is burnishing Pakistan's reputation, whilst peace is good for everyone, What does a more emboldened, ennobled Pakistan mean for India?
Well, I mean, this is clearly a blow to India. I mean, as I said before, on one level, what Pakistan is doing is good for India because India would benefit from an end to the war, just like so many other countries. But at the same time, India, for quite some time, one of its strategic goals has been to undercut and indeed sideline, if not isolate, Pakistan on the global stage. And yet right now you have the absolute opposite of that, right? Pakistan is in the global spotlight, and for good reasons, not for bad reasons. You know, it's been in the global spotlight a lot over the last few decades, but many times because of really bad things like Osama bin Laden being discovered on Pakistani soil. So I would argue that certainly this is a strategic blow for India, what Pakistan has been able to do, and you know how prominent it's become, and the fact that it has been able to showcase the fact that it is a serious country that has agency and is able to exert influence, considerable influence, in the Middle East, a region which is very important strategically for both Pakistan and for India. But again, India's own global significance and importance is not going to change no matter what Pakistan is doing. As I said before, India is deeply embedded in this changing Middle East with these new developments, including IMEC and I2U2, that'll be able to come into force more so if peace returns to the Middle East.
Michael, just following up on that, India's relationship with the U.S., specifically Prime Minister Modi's relationship with President Trump, has been, tetchy over the last year and a half. What implication does the events of the last few days have on that relationship being able to mend? We do have a trade deal that's still pending. And, I'm wondering if Pakistan now has more sway with the U.S., especially the army chief.
Yeah, this is an important point. I mean, one of the reasons why the U.S.-India relationship has gone south over the last year is the fact that the White House, including President Trump, have so openly embraced Pakistan, including the Pakistani army chief. And the fact that this started to happen just after the India-Pakistan conflict last year has upset India even more. And here it's very clear that the White House continues to look to Pakistan as a key player. And the fact that the U.S. has been comfortable with Pakistan playing this facilitation role, the fact that, or at least according to reporters in recent days, that the U.S. had specifically been pushing Pakistan to put together some type of truce proposal. This is going to reinforce for India the fact that the White House is really embracing Pakistan. And when you're talking about a country embracing Pakistan, that means that the country is embracing the Pakistani military, because it's Pakistan's military and its army chief that really drives foreign policy. So absolutely, this is not going to help the U.S.-India relationship. You're right, there is a trade deal, but it's sort of on hold because of the Supreme Court decision in the U.S. about tariffs. It is notable that India's foreign secretary has been in Washington the last few days, having a number of meetings, and I think that's meant to work toward strengthening relations at a moment when that relationship has stabilized a bit. Not just the trade deal, but also the new U.S. ambassador to India, Sergio Gore, who's very close to President Trump. He's a close aide. He has come to New Delhi with this message of positivity. He has tried to repair relations, and I think that the visit of the foreign secretary was meant to build on that momentum. But given what's happened over the last few days, with the White House clearly behind Pakistan, working with it very closely on this high-stakes peace process, that's not going to go down well in New Delhi.
So, Michael, this will fundamentally shift South Asian politics. And, just to follow up on Manika's question, I mean, what does an emboldened Pakistan mean? How might it use its new position in the region?
Yeah, well, I mean, Pakistan is, unfortunately, it does not have many friends in its own region. I'm not only talking about India here, but, we have seen over the last year or so, Pakistan has been able to take advantage of or leverage political change in Bangladesh to create an opening for improving relations with that country. It also has fairly friendly ties with Sri Lanka. I think that Pakistan may try to leverage where it is now to try to reach out to other countries in its own region, which would be so critical for Pakistan's trade and economic interests. There's very little trade within South Asia among South Asian countries. It is not just because of the India-Pakistan problem. So that's something that Pakistan might do. I also think Pakistan will continue to try to ride this momentum that it's enjoying now to deepen its influence even more inside the Middle East.
Sure.
So again, what's critical is what happens over the next few days, right? If Pakistan is actually able to host the Iranian and American representatives and actually get a permanent peace, now that would really put it in a big place. If it's not successful in that effort, that would be a setback for sure.
Okay, Michael, I want to turn inward for the last question. You're watching the important state elections, play out in India. We're still only in voting stage. The peculiar thing about strongman politics, which is the kind of politics that Prime Minister Modi and President Trump and so many other leaders tend to play nowadays, is that if you're weakened on one front, you tend to double down on the other to protect your image. How do you see this playing out in terms of Modi's local image protection?
Yeah, well, this is such an important thing for Modi, and he's been in office for quite some time. He continues to be arguably the most popular political figure inside India, and of course, he and his party were reelected for a third term, but the margin of victory was not what many had expected. But look, I mean, the position that we're hearing or that I'm seeing from those that are supportive of the government or close to the government is, well, look, it's best to stay out of what's going on with the facilitation process. It's complex, right. It's messy. You don't want to get dragged into something that can get ugly. Just sit back, see how it goes, and move on from there. And, Modi still has a very large base, of course. And I think that many of his supporters will take that position and just conclude that it's best to just sit back and watch and hope that peace prevails. And then India can go back to being that key outside player in the Middle East, given its close ties with many in the region.
Michael, great perspective there. Thank you. Michael Kugelman of the Asia Pac Foundation and our very own Menaka Doshi. Up next, how President Trump's H-1B visa chaos is fueling an unexpected AI boom in India's tech industry. This is Bloomberg. Here's a look at Indian markets a few minutes after the open. We're keeping an eye on IT stocks, including Tata Consultancy Services. Its quarterly earnings topped estimates, but analysts say that isn't enough to ease worries over its subdued growth outlook. Meanwhile, Tata and its peers are facing potential disruptions from President Trump's sweeping changes to the H-1B visa regime. India's IT industry has long used H-1Bs to send developers and engineers to client sites in the U.S. But Bloomberg Sarita Rai tells us fees of as high as $100,000 could be fueling a homegrown startup boom.
We are aware that a number of passengers do not wish to travel with us, and that's perfectly fine.
Confused and concerned, passengers due to leave San Francisco for Dubai last September demanded to get off the plane just before takeoff. The White House sprang a surprise with its $100,000 fee for H-1B visas, causing panic among foreign workers as well as their employers, including JP Morgan's top banker Jamie Dimon. Since 2011, roughly 70% of H-1B visas approved each year have gone to Indian nationals. In that time, the Indian economy has charted years of record economic growth, fueled in no small measure by a $315 billion information technology sector that deploys tens of thousands of engineers for American clients and has helped create high-skilled jobs for millions in India and a vast pool of talent. Sustained high growth has also deepened India's financial markets and matured its startup sector. India is witnessing an IPO boom that's raised a record $22 billion in 2025. And a top deal advisor expects 36 Indian tech startups with a combined valuation of $100 billion to go public by 2027. One of those startups is e-commerce company Snapdeal. In November, its parent Ace Vector received the market regulator's preliminary approval for an IPO. The company's origins lie in an H-1B visa rejection for co-founder Kunal Bell.
I think within a month or so I left and I came back to India. And I was very clear that I want to start my company. And if I'm coming back to my own country, what's the point of working for another company in my own country? Let me just start my own company. And that's how my journey of entrepreneurship began in 2007.
The strength of India's domestic economy has brought greater depth to its financial markets, startup ecosystem, and onshore services sector. That has prompted fresh Stanford MBA graduate 29-year-old Arnav Mehta to accelerate his return to India and work towards setting up a quant fund.
The uncertainty around H-1B and other visa programs led to more questions whether those programs might be changed. So for instance, one of my classmates from school had his extension denied. And as I was looking to build my own company, I didn't want to deal with a lot of uncertainty.
Indian policymakers are hoping the moment marks a reversal of a decades-long brain drain.
All intelligent people are going to America. Because of that, they are doing the best. Now some people are returned in India. That will help us further.
In the 1990s, Naidu encouraged Microsoft and other global technology companies to set up a base in a state in southern India. Now, he's targeting $1 trillion in investments over the next decade from the likes of Google and other tech giants.
There are some sectors where physical presence is important. Then they have to move. Otherwise, so many services you can provide online by having proper knowledge and leadership quality.
Wall Street banks have ramped up their India operations in reaction to the US visa crackdown. What began in the 1990s as back-office support centers has evolved into a mission-critical cog of global finance.
If I take a sample of Indians who went to Stanford, there were about 20 Indian students in my class. Only 2 of them have joined Big Tech. 3 people who were in finance have all returned back to India.
E-commerce entrepreneur Bell finds prospective Indian returnees queuing up for startup funding.
Very talented entrepreneurs or aspiring entrepreneurs outside India now realize that India is fertile for them to build global scale companies from here itself. And that's why a lot of them want to come back to India.
American tech startups face a harder time getting the talent they need to grow and innovate, with many likely to balk at the $100,000 visa fee. Meanwhile, in India's elite tech circles, there's quiet defiance towards Trump's immigration curbs. Domestic momentum has given young engineers and entrepreneurs more confidence to stay and build at home rather than chase opportunities abroad. Sarita Rai, Bloomberg News, Bangalore.
Before we go, here's a preview of our shows next week. We'll get insights on energy markets and global equities from Onyx Capital Group and Yadeni Research, plus exclusive interviews from the HSBC Global Investment Summit in Hong Kong. We'll speak to the bank's global head of markets, Patrick George, as well as M&G CEO Joseph Pinto. And that is it for Insight. Horizons Middle East and Africa is up next. Keep it here with us. This is Bloomberg.